Hey guys, hope you're having a fantastic day. Your old buddy Tim with Revolve Realty back with my old buddy Stephen Allen from The Mortgage Firm. How are you, Stephen?
Doing great.
We're just giggling about the size of our hands on camera here. The things you do, right? Hey, appreciate you tuning in really quickly. We're doing a video series on home mortgage facts and myths and 411 and all of that stuff.
That sounds scary.
I know. Ooh, scary.
Right.
Hey, so far we've talked about do you need good credit to get a home loan? We talked about how much down payment you need. We talked about closing costs. All of those videos are available right here on this channel. Just go back and take a look. Today we are talking about fixed rate versus adjustable mortgage rates. Which one is better and how to determine which one is better. Why don't you define what those are first?
Most simply put, you have got a fixed rate is the better option financially in a rising rate environment.
Okay, why is that?
Why it is because in essence, if someone told you that you're going to pay potentially double 10 years from now than what you are today, would you take the risk or would you want to lock in that rate for 30
I probably
years?
want to lock that sucker in for 30 years.
That's what most people recommend doing because it's in essence, you're taking a gamble.
Okay.
Do you want to gamble with that rate? And your home is your biggest investment that you own. And so when you're talking the difference of 4.5 or potentially a 6% rate,
it's a lot.
It's huge, and it makes a major difference over a period of 30 years.
So fixed rate simply means you have a fixed rate that does not go up or down in spite of what the economy might be doing.
Rates can skyrocket and your rate will be locked into what the day it is that day.
And if rates go down, you're still locked in at that rate, but that's okay. All right, let's talk about adjustable rate mortgages.
So really an adjustable rate, depending on what your situation is. If I have a buyer that comes to me and says, hey, I'm moving in here to town. I know that my contract is only going to be good for 5 years, and then I'm moving to California. Well, in that situation, why would I give you a 30-year rate when I can put you into a 5-year, what's called a 5-1 ARM adjustable rate mortgage? It just wouldn't make any sense.
Right.
Adjustable rates historically come with what's known as, in essence, a teaser rate. You have a lower upfront initial rate period, but it does alter to what market average pricing is after that term.
Right.
So with a buyer who's coming in, only going to be here for 5 years, maybe an adjustable rate is what's best for them.
Okay.
But it starts with the conversation, like everything.
So an adjustable rate, typically you're going to get a lower rate,
Yes.
Meaning your payment will be lower,
Payment.
but you are at risk that your rate may go up if the market shifts.
Well, let's say that contract extends and you're here for 10 years. You're going to have an adjustment in that rate at that 5-year period. Now it is capped, but that's still, it's an adjustment. If you are comfortable paying what you're paying, you got to be prepared for an increase.
Okay. So if you are looking at a long-term 30-year mortgage, fixed rate is your better option. If you're looking for something short-term with a lower rate, you should look at an ARM.
You definitely should. Even in some situations, an ARM can be the better option. Again, it starts with having that great conversation, trying to figure out what's best for you and your situation. Google always isn't the best solution, so make sure you call the mortgage firm. We can help you out with that.
Boy, there's a plug. Yes, someone asked me the other day who my family doctor was, and I said, Dr. Google.
There you go.
And so I've got a little catch in my chest. Right. So the point is, if you want to talk about fixed rate or adjustable rate mortgages, start with education. Talk to someone like my buddy Stephen here at the mortgage firm, and you can look at their situation, advise them accordingly, put them on the path.
Absolutely.
All right. How do they get in touch with you?
mortgagefirm.com/Huntsville or 256-705-3476.
You forgot the number.
I had to think about it.
I do that all the time. I give Domino's number. Well, they call and ask for me.
My cell and my work are very similar, so I almost gave you my cell number. Not that that's a bad thing.
All right. Well, if you can't get a hold of him, call me. 808-8070 is my office. My cell is 679-0704, tim@revolve.com. On the next video, we are going to talk about, should I lock my interest rate? Hold on. Damn it. Should I lock my interest rate? On the next show. See you later.
I love it.